Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial jargon so you don't have to. Today, we're diving into an 8K filing from Lumen Technologies, and let's just say it involves some serious debt maneuvering. Imagine wanting to buy back some of your IS to make your financial house look cleaner and hopefully get a better deal on future borrowing. That is essentially what Lumen Technologies is up to, and we're going to break down what their recent announcement about tender offers means. Alright, so what we have here is a current report on Form 8. Think of this as a public announcement of important events that shareholders need to know about right away. This particular report from Lumen Technologies Incorporated, dated the 22nd of December 2025, is all about their efforts to buy back some of their outstanding debt. The main players here are Lumen Technologies itself and one of its subsidiaries Level 3 financing. This subsidiary is the one actually making the offers to purchase certain notes, which is a fancy way of saying they are trying to buy back their debts. Now, what kind of debt are they trying to buy back? They're focused on what they call existing second lien notes. These are essentially loans that are lower on the priority list if something were to go wrong, meaning other creditors get paid back first. Lumen is making offers to buy these specific notes, and they're looking to buy back a significant amount of these notes, up to a total value of $1.5 billion, not counting the interest that is already built up. That is a chunk of change. They are doing this through cash tender offers. This means they are offering to pay cash to the note holders in exchange for the notes. But it is not just about buying back the debt. They are also asking the people who hold these notes to agree to changes in the original loan agreements, called indentures. They want to get rid of a lot of the restrictive rules, or covenants as they call them, and also release any collateral that is currently securing these debts. This basically means they want to simplify their debt structure and give themselves more financial flexibility. Think of it as wanting to clear out old clutter to make your house easier to sell or refinance. The specific notes they are targeting, in order of priority, are the 4% second lien notes due in 2031, the 3.875% second lien notes due in 2030, the 4.50% second lien notes due in 2030, and finally the 4.875% second lien notes due in 2029. They are offering to repurchase these notes in these specific orders. This report includes a press release announcing the early results of these tender offers. While the filing doesn't give us the exact results, it points to an attached press release, which is where you'd find those specifics. This is good corporate practice to quickly inform stakeholders. Now, it is important to note that this report itself isn't the offer to buy. It is an announcement about the offer. This is a legal formality, basically saying that this document isn't a promise to buy or sell, but rather information about their intentions and actions. Like most of these filings, there is a section on forward-looking statements. This is where they tell you that anything in the report that sounds like a prediction about the future, using words like will, should, expects, or believes, are just that, predictions. They're not guarantees, and actual results could be very different. This is a standard legal protection to shield the company from lawsuits if things don't pan out as expected. They're essentially saying, hey, these are our best guesses, but the future is uncertain. And as with most 8K filings, there are exhibits attached. The most important one here is Exhibit 99.1, which is that press release we just talked about. This is where the really detailed early results of the tender offers would be found, along with any other immediate news they want to share. Now, let's talk about what this all means. Lumen is a telecommunications company, and like many in that industry, they carry a significant amount of debt. Companies often use debt to fund operations, growth, and acquisitions. However, too much debt can become a burden, especially if interest rates rise or if the company's financial performance falters. By buying back these notes, Lumen is essentially trying to reduce its overall debt load. This can have several positive effects. First, it could lower their interest expenses in the future, freeing up cash for other uses, like investing in their network or returning capital to shareholders. Second, it can improve their credit rating, making it easier and cheaper to borrow money down the line. Third, by persuading note holders to consent to changes in the indentures. They are aiming to remove restrictive covenants. These covenants can limit a company's operational and financial flexibility, so getting rid of them is a big win. Think about it like this: if you have a bunch of loans with strict rules about what you can and cannot do with your house, and some of those loans are higher interest, you'd want to pay off the expensive ones and get rid of those annoying rules, right? That is what Lumen is trying to do. They are also aiming to release collateral, which is like getting your car or house out from under a loan so you have full control over those assets again. The fact that they are offering to buy back up to $1.5 billion in notes from their second lien debt stack suggests they are serious about deleveraging. The success of these offers will depend on market conditions and how many note holders are willing to sell their debt back to Lumen, possibly at a premium, looking at this from a strategic perspective. This move signals that Lumen is prioritizing financial health and flexibility. In the competitive telecom landscape, having a strong balance sheet is crucial for investing in infrastructure, competing with rivals, and adapting to new technologies. By simplifying their debt and reducing their interest burden, Lumen positions itself to be more agile. However, we also need to consider what this means for the specific notes they are targeting. If many holders of the 2031, 2030, and 2029 second lien notes decide to sell, it could indicate a lack of confidence in the long-term prospects of those particular debt instruments, or perhaps holders are simply looking for an opportunity to exit and redeploy their capital elsewhere. Ultimately, this 8K filing is a snapshot of Lumen's ongoing efforts to manage its finances proactively. It is a move designed to strengthen its financial position and provide greater strategic freedom. While the exact results are in the press release, the intent here is clear: to reduce debt and gain more flexibility. Now, looking at these results more broadly, Lumen appears to be taking proactive steps to improve its financial structure. The strategy of deleveraging and simplifying debt obligations is generally a solid move for companies with significant leverage, especially in a potentially volatile economic environment. The key will be how efficiently they can execute these tender offers and whether the changes to their indentures truly unlock the operational flexibility they seek. A notable risk here is if these tender offers are not as successful as hoped, or if the cost of repurchasing the debt proves too high, it could strain their cash reserves. Conversely, a successful buyback that significantly reduces their debt and improves their credit profile would be a positive development. In conclusion, Lumen's announcement about its tender offers for its second lien notes is a significant event showing a clear intent to strengthen its balance sheet. It is a move that could pay off by reducing interest costs and enhancing their ability to invest and compete. Alright, that is our breakdown of Lumen Technologies' latest filing. What is your take on these debt repurchases and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.